Hello everybody. Today is Saturday, September the 28th, 2013. My name is Michael Wright and this is the weekend Elliottwave video. Just before going forward, please do pause the recording and read over the risk disclaimer. Alright, as we look to close out September, what a interesting month. We started off pretty hot. And then, when I mean hot, we started off the month first week, we were up 250 pips, and then the second week gave some back. Third week was pretty flat, and then this fourth week was really a major boost to the top side, nearly bringing in almost 800 pips as we now are up 500 pips for the month. So a great end off to the month as we look to close out September, even a better rebound from last month. One thing as traders, you kind of have to always look forward. I know a negative aspect that I see amongst regular traders, those outside of our team, is when you have a bad trade, you're just stuck on that bad trade. Or you look to see, okay, this is what happened, but then you just over elaborate on it. Like you stick on that bad trade for days. Whereas, I know specifically for me, I'm just constantly looking forward. I let the past be the past, and then you're looking for the next trade, you're looking for the next risk to reward, and you're staying true to your style of trading. Alright, so that's all. Just one aspect I wanted to place emphasis on for those of you guys who are newbies, or even those of you guys who have been around for a while and never experienced something of that sort. So trading is trading. As long as you stick to your core and you have your risk management settings, always look forward to the bigger picture. So in any case, we remain long Euro Aussie. Euro Aussie, I'll show you guys a setup. Good trade in my opinion. We got out near the top, re-entered at trendline support. This was optimal for me because you know what, I missed this first test. This is ideally where I wanted to re-enter. I missed that one, but the market did pull back and allow me to get back in. So we will look at that trade, and then we are still short Kiwi dollar, with the Kiwi dollar also at break even. There is a difference between the Euro Aussie and the Aussie dollar, though they are at break even. Reason being, Euro Aussie we got in at 143.97. It's currently at 145, so we are up just about a little bit over 100 pips, and still looking higher. Where are we looking for next? So drawing a fib, so there's a couple interesting pinpoints, okay, looking at the Euro Aussie. We already filled in one gap, but we still have another gap that is just around 148.52, so pretty far away, okay. And drawing a fib, that will be the 78.6% Fibonacci retracement. Targets now, like for one, we did revise it. Let me go ahead and I'll pull that up. So the revised targets are for 146.60. Alright? So if 146.60, in my opinion, there's still some more top side because it could possibly reach up to 148.56. If it hits that, you're talking about 260 pips. I'll be comfortable with that, and then possibly look into getting or looking to re-enter if a pullback. What I may do is just keep on trailing stops, locking in profit, and then see if we can hit that 148 marker. Okay, 148 flat is also psychological resistance, but the big aspect is that 148.56, which is the Fibonacci retracement on the 150.40 to the 140.180 down move, and also that open gap that I mentioned earlier. So with that being said, now you look at Euro dollar and Aussie dollar. Is it that Aussie dollar is going to continue its downside momentum, or is it that Euro dollar is heading to new highs? In my opinion, both hold true. First, if you look at Euro dollar, we did break trendline resistance on the down move. So now we have trendline resistance, now turn support. So ideally, you're still looking for new highs. At the same time, taking a look at Aussie dollar, there's still a downside gap. So it's basically kind of the same as, it's just inverse of Euro Aussie, right? Except Aussie dollar has two open gaps. So first, in my opinion, we fill in that first one. So that first open gap comes in just around one, or just around 92.40, but the 50% retracement is at 92 flat. This could work out or bode well in terms of retesting that previous high while matching the gap fill, and at the same time finding that horizontal support. So that being said, 92.10 could be downside target. So you still have 100 pips lower here, and then looking back at the euro dollar, you still have new highs will be 135.80. So you have 60 pips. So your Aussie still plays out, in my opinion, that a good trade that I'm gonna stick with. And right now we already locked in 50 pips. So worst case scenario is that we come out 50 pips in a profit. Best case scenario is that we keep on trailing stops, and then we look to get out around psychological resistance at 148, but it could extend to 148.60. I'll throw away those other 60 pips because 148 will match just about 400 pips. All right, so we'll play out one aspect. Is sticking with the trend, stick with the trades, and holding on to it. And as we carry them over for September, October could possibly, or we look for October to be a profitable month without taking as much trades. Okay. Very important. As you guys know, we are swing traders. So being a swing trader, this is one time that will bowl out very well for us. Here we have Kiwi dollar. I'll put up a count real quick. Something interesting happened to my chart over the weekend. Had a little power glitch, so all my counts got erased. So I'm still in the process of have a good memory, so just have to pull them all back up. But the outlook still remains the same. Okay. Now Kiwi dollar, we have a typical Elliottwave count. 5 waves down move. Reason why we call this a 5, momentum divergence, bullish, and we see that top side. At the same time, this appears to be a typical ABC with the C wave measured move that came in at the 161.8% Fibonacci extension. With that being said, we got short at 83 again, and 82.90, sorry, and then we had a flag breakout. So if the flag breakout and this top looks to appeared here, we now look for a minor fifth wave down into 81.50 still. We take away, let's clean this up a little bit because all we really care about is that extension. Alright? So we take away these other aspects and now we look for support. Correct? With support now, next big support area is 81.57. No reason to get out at this moment, in my opinion. If it continues down, I'll look to book profits, and not book profits, but trail my stops. We still have similar idea set as with Aussie dollar. We have a downside gap at 81-ish, 81.20, and then we have another gap down near 77.10. All right, so I will look to exit around 81.50. I'm content with that, and take it from there. But at the same time, another area that I'm comfortable with this Kiwi dollar short and looking to just hold on to it is because also that break of that trendline resistance. All right, trendline support, now turn resistance. So a couple good trades we are entering October with, entering the new week with, and going forward. We'll see how euro dollar and pound dollar plays out. I'm looking to take advantage of some downside moves if we can start breaking some key support areas. But as of right now, going to stick with our trades and then look for, again, pound and euro dollar to really play catch up with the Aussie and Kiwi. But again, looking at what we just did, could appear to be some further upside. We'll need to see some divergence before looking for a reversal. Alright guys, cheers. Hope everybody's enjoying the weekend. Liam will be holding the weekend webinar tomorrow. So good luck trading everybody, and I hope you are all able to join them. Cheers, and I'll talk to you all in the chat room, or feel free to Skype me.